Are you ready to take control of your financial future, but have no idea how to start investing in the stock market? Imagine making your money work for you while you sleep. Stick with me, and I'll show you how to begin investing step by step. No jargon, no confusion, just simple, actionable advice tailored for 2025. Welcome to Money Talk HQ. If you're new here, don't forget to subscribe and hit the bell icon so you won't miss any tips to grow your wealth and knowledge. Today, we're diving into the world of stock market investing, perfect for beginners who want to start in 2025. Let's simplify the process and get you investing with confidence. First, let's talk about why the stock market is an incredible way to grow your wealth. Historically, the stock market has outperformed other investments like savings accounts or bonds. With the power of compounding and a long-term mindset, your money can grow significantly. For example, investing just $100 a month can turn into thousands of dollars over time. The earlier you start, the bigger the benefits. Before diving in, here are the basics you need to know. Stocks are pieces of a company. When you own a stock, you own a part of the company. ETFs, exchange-traded funds, are bundles of stocks, offering instant diversification. Dividends are payouts some companies give to shareholders, which can boost your income. Keep in mind, investing is about building wealth over time, not getting rich quick. Steps to start stock market investing. Step 1. Set your goals. Ask yourself, why am I investing? Is it for retirement, buying a house, or building an emergency fund? Knowing your goal helps you choose the right investments. Step 2. Build a budget. Start with what you can afford to lose. Even $50 a month is enough to begin. The key is consistency. Step 3. Choose a brokerage. In 2025, platforms like insert examples based on country, region make it easy to invest from your phone. Look for low fees, user-friendly interfaces, and educational resources. Step 4. Learn about risk tolerance. Are you okay with short-term losses for long-term gains? Knowing your risk tolerance helps you pick the right stocks or ETFs. Step 5. Start small. Don't overcomplicate things. Begin with ETFs like the S&P 500, which tracks the top 500 companies in the US, or invest in companies you know and believe in. Step 6. Monitor and adjust. Check your portfolio regularly, but avoid panicking over daily market swings. The market goes up and down, that's normal. 5. Common mistakes to avoid. Here are 3 big mistakes beginners often make. Trying to time the market. It's nearly impossible to buy at the lowest and sell at the highest. Focus on consistency instead. Investing without research. Always understand what you're buying. Putting all your eggs in one basket. Diversification is key.